That, let's get a fundamental view on crude. As we told you, the crude has now entered a bear market. It's now trading near multi-month lows as glut fears persist. Jonathan Barratt, the economist and the CIO at Ayers Alliance, joins us now to talk about that. Jonathan, good morning. Do you see any marked reduction in crude stockpiles, or are we staring at a glut for a longer period of time, which could further take crude prices lower?
Yeah, good morning. Look, I think at the end of the day, recent data, particularly out of the States, says that the inventories have grown. But more recently, just over the last 24 hours, we've seen a small draw. Now, the key for us as to whether or not that draw represents more of a trend over the last couple of months. But outside that, when you really look at the market, there's a lot of supply coming onto the market, particularly from OPEC members such as Nigeria, Libya. But we're also seeing more supply coming back from the oil shale people. So when you look at the prospects for that glut to occur, and without the lower end of the range, it suggests that we're going to spend a little bit more time down here, possibly even go lower from here.
Well, one thought that there was a bullish factor in the OPEC and even their non-OPEC friends trying to control output. You don't see support emerging? If yes, where?
Look. When I look at the OPEC, 1.8 million barrels. Now that should, by all means, be a bit of a dent. But when you look at increased supply from Libya and Nigeria, that'll make the effectiveness of the supply cuts be reduced by around about 20 to 25%. So either you increase those supply cuts and you be strict about those supply cuts to provide a support. Look, I think at this level, we have to test really the resolve of the range that we've been in. And that's what we're going to go through, I think, over the next couple of trading.
Okay, so...
And we go significantly lower, but I don't think we go too much lower. Sorry,
I didn't get the level you think that might be a support.
I think that level of support, WTI around about that 40 to 41. When I look at Brent, I can see that around about 43 to 43.5.
Okay, so participants are not convinced that the OPEC could shore up prices in the near term despite the glut?
Well, look, I think if it really did make sense, then prices wouldn't be down here. What we're seeing is more supply coming up. Remember, oil shale production is tipped by the end of the year to increase by about 920,000 barrels. Now, that currently sees US production at about 9.33 million barrels. That's something the market really didn't focus on, and how quickly. But I think the important thing is that cash cost of production sees it round about that $40 to $43 a barrel. So if it starts to go below that, then obviously oil shale producers in the US will start to lose, which I don't think they'll want that to occur.
Okay, that's why you're seeing a support at that level. Is there any point at which the OPEC production cut agreement may begin to falter? Because ultimately all those countries are desperate for cash, and if someone's cheating and prices are not holding up, will the entire agreement break down? Is there a bigger bear case is what I'm asking?
Look, I don't think so. I think when you look at OPEC and non-OPEC members, they've decided to be very strict about their compliance. So I think there's a new regime enacting within the cartel for the common good. So I feel that they won't do that. The key also, I guess the concern is the carve-outs within that supply agreement that have related to the likes of those OPEC members that have issues. And I think if they tightened up that aspect of it or provided limits within that, then that'll help shore up the agreement and also shore up that supply. But that, I think, is the next level of thinking that the OPEC and non-OPEC members are going to be going through.
All right, let's check out how that happens. Thank you very much, Jonathan Barratt, for making this unscheduled stop with us. So that's the level.